The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. Good turnaround Tuesday to you. How's everyone doing today? FX Glenn, I see Hardianto's here. Our guest is here, Yohei Elam. I'm looking forward to speaking to you today, buddy. Hi, Zig. How are you? Hello, Ron. So I have a couple of pairs I want to cover. And before I turn it over to Blake, I just want to cover the indices, mainly because of what Norm Winsky had to say on Friday. But we'll start with the pound. Last Wednesday, when the dollar was getting killed before the Fed, talked about getting short with stops over the high. This is a downtrend that keeps giving and giving. And so it continues to give while Euro stiff. Still think there's a possibility, if I'm right, for the Dixie to head up towards a 99 level or even 98.5. And it's at some resistance here that we have to get at least one cave day in the euro. So looks very neutral to me. Of course, the preferred short was cable, something identified last week. You want to short the pair that's not making the new high. Euro was, EG was still strong, so trade selection on the short side of the pound. Give me a Y if you learned anything from trade selection from last week, shorting the relative weakness rather than the relative strength, which would have been the euro. Not saying that you couldn't have done well, because also talked about one more drive for a 3 before it came off, and that was a nice trade too. The other thing I want to cover currency-wise here is USD CAD. Talked about yesterday the potential of having some type of ABC that'll give us some shorting opportunities. Have to be wrong over this 35 level, so maybe we could get up towards 320, 3.5. I doubt it that we're going to get back to 4, but I would say 3.5 would be a good level to start probing it. Crude is lower, so maybe we'll get this pop in Canada. Long-term bearish. Even our guest yesterday was extremely bearish. Howard Friend, I think, was pointing towards a 116 Canada. Give me a Y if you're with me on that analysis. So we want to be opportunistic in Canada and sell strength. This thing is just beginning. And I just want to cover the indices. Who was here for Norm Winsky's interview on Friday? Well, I noticed at the end of his presentation he had an anniversary date, and I asked him what it meant. It was 55 times 55. If Nick's here, she'll probably remember or know what it is. He said they were Gann numbers, and my best guess is that it was the low in 09. So I think we were 55 times 55 weeks from the low of the bear market and the financial crisis. So sometimes his cycles, he had written down a low, but when you're rallying into something like this, it's usually a fade. So we didn't break into that event. We rallied into that event. And the S&Ps are diverging on a 4-hour time frame. The 1 hour looks like it still may have some work to do. This was a pretty high reading on the 1 hour. Everyone see that? Like 80-ish. So we've come off a little bit, so maybe we make another run up towards 55. But when you look at the 4 hour, it's pretty glaring divergence from here to here. And you look at the daily, it's got to start to turn down soon, or it's going to blow out the daily divergence as well. So there, just like the pound was a relative weakness short, that's the S&P. The Dow is even a little bit stronger, but check this out, face. Check this out. NASDAQ, sure, look, we talked about this, I believe it was Monday or Friday, that the NASDAQ could rally back. It's not making a new high. It's my contention. It's going to lead the correction. Sure looks like a flag to me. I'm not saying that it is complete, but we're not even close to the highs. So, you know, they could pull back here and make another move, but I think you could be short NASDAQ with stops over the highs. Some other confirming bearish developments. Check out the DAX. Look at this. I'd say there's pretty good divergence right here in the DAX as well. Kind of has a look of a rising wedge. Here's 1, here's 2, here's 3. On the 1 hour, maybe that too has a little more work to do. Maybe there's already a confirmed high. Maybe. Okay, so the Japanese market looks much stronger. Maybe that's because Nick's going to be right about the yen. But even the UK market, not making a new high here. Here's your 1 hour. Here's your 4. Almost looks like a right shoulder. Could be wrong over 75.60. And it gets through 74. I would think 72 is possible. So the FTSE normally leads. This to me looks like a failing rally. So actually in the US, the NASDAQ's a preferred short. And in Europe, I would say UK. Yeah, so the WTI going down, may give us that chance to short Canada higher. So you guys don't have to agree with me. You know what I mean, Windsor, William Whitelaw? But you get the analysis, because no one's going to click your mouse for you. We're all captains of our own ship. Everyone agree that we're all captains of our own ship? So we take responsibility for what we do with our mouse. We never blame anyone for a forecast that doesn't work out, and we all root for each other. That's what makes us a community. Okay, I'm going to see if Blake's around. Okay, Craig. See if Blake wants it.
Here. I was just updating something real quick for the ForexAnalytix
okay, buddy.
subscribers. How you doing today?
I'm doing good, Blake. You?
Good. Other than the cable has come under pressure, so I have some pound crosses that I'm long.
Oh, yeah.
Yeah, and came really close to getting stopped out of the pound New Zealand, but I haven't been stopped out yet. I don't know if it's an eventuality, maybe, perhaps, but I don't know. Here, let me go ahead and take things over here. And good morning, by the way.
And you talk, you know, you're the calmest guy I've ever heard near a liquidation point.
Oh yeah, I mean, it's just part of it. So I'll since I'm speaking about it. So here's the pound New Zealand. My stops aren't too far away from these lows, and we were looking for, well, I was looking for a breakout above here, and so I've been long since about 176.50 is about my cost average. My stops is not too far away from these trend lows. So I might get stopped out. I'm a little bummed out, but I knew the risk going in. So I'm still long. It just I'm getting close to getting stopped out. There's the pound Aussie too that I'm also long. That my stops are just below this channel low. So we'll see if I get stopped out of there too. Again,
well, it's Tuesday. Maybe we get a turnaround Tuesday, Blake. I had a manager when I was at a commodity firm at Madoff and Sons, and his analogy to being wrong in the market sometimes was, if you drive a taxi, you're going to get a ticket once in a while.
Yeah, probably. That's a good analogy. I mean, it's and with the markets, I'm right, maybe 50% of the time, maybe a little bit more, probably more like 60. If I ran out there and crunched my numbers, but it's just what you risk versus what you're looking to make, and as long as you don't cut your gains, you let your gains run and you cut your losses short, then that's how you get ahead in this game, and knowing that you're going to be wrong. And Speaking of which, I actually shorted a little bit more S&P than I thought I did. I got up this morning and I looked at my order management system, and I'm like, oh crap, I'm short a little bit more S&P than I thought. But I want to take you guys over to ForexAnalytix really quick, and this is a chart that I posted yesterday. I want to show it to you, which is really, I think, relatively important. And I actually posted a monthly chart, which we don't post monthly charts that often. But this is really interesting. If you look at the monthly chart of the S&P and look at the distance from the 200 period moving average, that's the 200 month moving average in the S&P. We have matched the distance from the 200 period moving average that we did back in 2001 during the tech bubble, if you will. And I find that really interesting because I use a theory. It's called people that have known me for a long time know that I call it the rubber band theory. The rubber band theory goes back to when I used to teach people in person, and back before we had this type of technology, I used to actually travel around the United States, Canada, Asia, Singapore, Hong Kong, Australia, and I would teach people live in like hotel conference room settings. We'd be in a big conference room or a one of the banquet rooms, and I would have my laptop hooked up to a projector, and I would teach people how to trade. And then I did that I traveled extensively for about 5 years with the Wise Trade Group, and that, like I said, that's before we had GoToWebinar and all this great technology that we can use and just do it from home. And I used to, every morning that I would do these training events, Dale, I'd get my Wall Street Journal
and your tie on.
Well, I'd have a tie on. Well, no, typically I didn't actually. I didn't wear a tie when I traveled.
You maverick, you.
It's just it's just.
I know.
I just get uncomfortable wearing ties. It's just like I hate having things around my neck like that. Anyway, I'd carry in my Wall Street Journal, which I'd get from the hotel lobby, and at the time, and they don't do that anymore. But the Wall Street Journal would be it'd be wrapped it'd be bound in a rubber band. So I would pull the rubber band off and I'd put it in between, my pointer finger and my thumb. And I would say, okay, this is in front of an entire, audience of 50 to 150 people. I would say, okay, well, if you take this rubber band and you stretch it too far one direction, I have it between my pointer finger and my thumb, and just imagine me stretching this rubber band. Okay, at some point the tension gets so hard that the rubber band is going to, without breaking, it's going to do what? It's going to snap back. And this would be the first thing I would say as I would go into, a training event. And I would say, when you stretch a rubber band too far in one direction, it typically will snap back. It's going to either break or snap back. But let's just say, for argument's sake, it's not going to break. What else will it do? It's going to snap back. So when it snaps back, it's basically reverting back to the mean. And it's in the markets, one of the reasons why we use a 200 period moving average is to show traders when you get too far away, when the rubber band becomes too stretched, it eventually snaps back to the mean or the 200 period moving average. You can see just looking at the 200 period moving average in the S&P, that as you stretch too far away from it, you snap back. You stretch too far away from it, you snap back. This is the financial crisis here. And then you pull too far away, and you're gonna probably get some reverting back to the mean. So we are as far away from the 200 period moving average on a monthly basis than we were at the height of the tech bubble the first time around.
That's a great point. That's a great look, Blake.
And so, and that doesn't necessarily mean that, oh, today we're gonna short the markets, although I did short the markets yesterday, and I'll show you the reason why. But I'm illustrating to you guys the overboughtness of the market, and can we go higher? Sure, but we're getting to a point where the market is getting very stretched. Okay.
Looks like you have one more number up there at 2.618, 2507.
Well, let's go to the S&P and let's go over to the daily chart. Okay, and we hit yesterday the 161% extension of the February high to March low, and we hit the 161% extension at 200 or 2450. All right, so I figured yesterday, well, I don't mind taking a stab at the S&P, which I did. Like I said, I sold a little bit more than I thought when I got up this morning. I looked at my system and I'm like, oh, I'm in a bigger position. Anyway,
you could throw a few in my account, Blake.
I don't want to get too excited about being short the S&P until we break below this. This see that little. There's a lot of people that were shorting yesterday into this. They called it, oh, it's a triple top. Oh, you know, it's big resistance. And you guys might have seen my tweet. I said triple top build stops, and that's what happens. Is people thought it was a triple top. They put all their stops above there, and we spiked above it. So we need to get below, like, let's just say roughly 2445 in the S&P. You know, really to just have been a false breakout. And you know, it's not like I'm looking for, you know, move back down to 1800 by being short the S&P right now. I'd be happy with just a move back down to 2420, or maybe move down to 2400, depending on how things play out over the next couple of days. But I would like to see us close below 2445 in order for me to keep this position that I established yesterday. So that's just something that I'm doing. And then also, if you guys can't see it here, I'll just go over to the daily chart on the S&P. We're also at what would be potential channel resistance, and the reason why I say channel resistance is you're taking the lows here, and then this line is the same. This line goes across the highs here from back in 2014, and if we're at channel resistance, we're pretty damn close to it, somewhere up here. So again, I don't mind being short, and the market's acting all right. I mean, it looks kind of heavy. The Nasdaq was trading pretty heavy this morning, but what we've seen in the markets is just a lot of rotation. If it comes out of the Dow, it goes in the Nasdaq. It goes out of the Nasdaq, it goes into energy. It goes in, and then the S&P gets bid. It comes out of energy, goes into retail. So it's just,
it never goes into cash.
No, and not yet anyway. And we haven't seen that. And that brings me to another issue of other things that I'm looking at. So right now I'm also, I was actually also considering shorting the dollar Canadian, and let me show you the chart. I was waiting for a move up to 133, and I was going to get short up here, but the Canadian data that came out, we saw the wholesale sales and current account numbers come in a little bit better than expected, and that stopped this rally that we were seeing. And the rally that we were seeing is because of crude's breaking lower, and I don't know if you guys have noticed, but crude broke into new trend lows. So we're officially now making higher highs and higher lows. I mean, if you look at crude, lower highs, okay, lower lows now. So we're setting a nice little downtrend in crude, and that is what spiked up, in my opinion, that's what spiked up the dollar Canadian initially, but it got stopped because of the stronger Canadian data. Now, I don't mind being short the dollar Canadian if we hit 133. The thing that I find a little risky in this type of situation is what happens if we get some risk off, because if we do get some risk off, then the dollar Canadian might go bid, and the dollar Mexican peso might do the same, and that tends to happen during periods of risk aversion. You start to see a spike higher in some of these dollar pairs. So I'm I haven't shorted the dollar Canadian. I was considering it. I just, you know, I'm trying to, you know, wrap my head around that it's okay, but it would be conflicting to me to be short the S&P and then have the dollar Canadian be short that, because, you know, what could happen is the dollar Canadian could end up really, you know, rallying back towards 134, maybe even higher. So I don't know. I don't know what I'm going to do with this just yet. You know, the euro, you talked about, you know, the dollar, and here's the euro the way I see it. And the euro is, if you take post-French elections, okay, so this fib right here, I'm wagging it around so you guys can see what I'm looking at. This is a 38% retracement. That's been holding. That's basically 111, roughly 111.10, 111.20, okay, and that's been holding. Now we have this, you know, downsloping trend line that eventually looks like, you know, it's a bearish wedge. It should break lower. You know, the euro should, you know, at least take a stab lower towards 110, maybe 110.50, 110, which would be the 618. I could very easily see this, you know, a move down that looks like this. But at the same time, you know, if the euro dollar breaks through this 111, you know, let's say 111.60, 111.70, we break to the upside, you know, this one could also, you know, start rallying again towards a 113. So I don't have a position in the euro dollar. I'd rather see it dip to 110 to be a buyer. But, you know, what I want and what happens in the market are, you know, a lot of times two different things. Just because I want something to happen doesn't necessarily mean it's going to happen. But that's kind of what I'm waiting for. I'm waiting for a dip down to 110 to be long.
Have I taught you the cursor technique?
No.
Well, you put your cursor on the last candle and you drag it in the direction you want the market to go.
Oh, does that work? I need to try it because it's never worked for me.
Yeah, you've never tried it.
Do you have?
And some people use magnets.
I'm dragging it around and it doesn't do anything for me. It just doesn't.
You need a magnet. Some guys use magnets.
Good morning, guys. I have a question. Do I have to keep a button clicked while doing that, because it hasn't worked otherwise?
Yeah. Oh yeah, right click on it. Yeah.
Oh, right click. Okay.
Yeah,
right click and drag.
Drop and drag it. Yeah, drag.
Anyway, I use that course.
And we've spent so long trying to decipher the markets while it was so simple all along, right?
Right. Exactly. But I guess one of the other things I wanted to point out is obviously the cable. Carney really talked down the idea that the Bank of England is even close to raising rates, and this hit me, being long the pound New Zealand and pound Aussie. This move really hit me overnight, and we're at some pretty key support here on the cable. I mean, if the pound breaks below 126 and a quarter, that's going to be a fairly bearish event for the pound. And what looked promising for the cable last week with the MPC votes really swaying towards the hawks, you got the Chief Carney, who is obviously not very hawkish at all. So the pound
Nicola Duke has been bearish for weeks. That's all I can say.
Yeah, and I mean, if you look at like the longer term, look at the longer term of the cable. I mean, if this green, like we were really short the pound. At least I was really up here towards 127 because of what I saw as a channel resistance, and I was long the euro pound as a result. Yeah. And then it fell. I took profits off the euro pound long and whatever. But we're pretty much in the middle of this channel. If this channel is really in play, but I don't know. The cable does look vulnerable, and the dollar, it looks questioning the dollar for the last couple of days. Not really sure if it's going to rally, and frankly, we just don't know how the dollar is going to act if we go risk off. I mean, we haven't seen risk aversion in the market in, I can't even, feels like years. So how does the dollar react should stocks start to come down? I don't know. And I don't. I could sit there and draw some conclusions that.
I think you were in 7th grade, Blake.
Yeah, it's been a while. I mean, I might have been a senior in high school, perhaps. But the thing is we haven't seen risk off in quite some time. We have seen bonds move, and we know that if bonds move up and yields, go down, then the dollar goes down. But that's in a rate. That's just looking more at the bond market in a risk-on environment. So I don't know what the dollar is going to do, and I think it's going to be interesting to see what happens because we have seen gold. And by the way, I picked up some gold yesterday, and I'm marginally positive. And if you use ForexAnalytix, the reason why I was buying it, and you guys should all know, and actually I have it as a pattern in play here, right here. Bullish bullish gold from yesterday. It's because we were at a 618 retracement, trend line support, 200-day moving average is sitting, right here at 1237. So we should see a reaction from here higher. But let's say the market, let's just say that overall the stock market comes down a little bit. If gold goes up and bonds go up and the dollar goes up, which could realistically be the case, if that happens, then that the stock market is really in trouble. I always tell people it's one thing to see gold and the dollar moving inversely, which they normally do 80-85% of the time. Gold goes up, dollar goes down. That's very typical. But when you see gold and the dollar move up and you see bonds move up on top of that, then that you're in a very risk-off type of environment. One last thing that I want you guys to look at and keep an eye on volatility. Volatility is, obviously historically very low. If you start to see the VIX spike up here after the stock market open, then that the stock market is probably going to be due to correct a little bit. So I'm going to keep a real close eye on volatility. So volatility goes up, gold goes up, dollar goes up, bonds go up, then we got some serious problems in the stock market. But that's all I got. I've got to get going for the New York. Oh, so Steve, I'm going to transfer it over to you because I already heard his voice.
Thanks, Blake.
I don't know who Steve is.
My pleasure.
Here.
All right, he's not there. Well, Steve, that's not there. You've got the charts, and have a great interview. I'm going to try to listen in a little bit later to Mr. Johan as well.
Okay, Blake.
Yeah, because he's like you, Blake. He's a great fundamentalist. So I'm looking forward to picking his brain on these things that you talked about. All right.
Awesome. All right, you guys have a great one, and I'll talk to you soon.
Bye-bye, Blake.
Okay.
So, Coach Dale, what do you want from my life today?
Let's ask the community. Well, let's see Steve Silver grinding lower.
Yes. I mean, we've made that abundantly clear. I said it yesterday. I'm monitoring. I haven't seen anything that tells me, the move lower is done by any means. Today we had an attempt of a recovery that, failed already. I mean, you never know what happens until the end of the day, but definitely we currently have a shooting star, which, isn't looking good. So we seem to be resuming the grind lower. Most probably gold has already given back half of its daily gains. So, it's very likely that we're going to see something equivalent there as well. So, there's nothing telling me that the metals are actually reversing at the moment. They didn't reverse on the 61.8. Of course, they still have the opportunity to reverse a little bit lower. For gold, it's the ascending trend line, which could then verify that perhaps the formation we have at hand here is a flat top triangle, but we also have the 200 DMA a little bit lower, but nothing to see here yet, folks. So
the DAX and the FTSE look heavy to me. And of course, the NASDAQ, if you're a bear and you're looking at these other averages, and you're short NASDAQ. And you know, I was going to tell Blake that it reminded me, the way he had the reversion to the mean, reminded me of this chart you've been showing for about a month.
Yep.
So take a picture of a 3 drive with divergence today.
Yes, you see I've already marked it here on the DAX. You see the RSI is already ready, and you're right. Also, if it reverses, because those are very big ifs, we also have something else positive.
It's 55 times 55. It's happening today.
Okay.
Well, it's Norm Winsky's Jan numbers, and I believe it's 55 weeks times 55.
You know,
from the March 09 low.
Okay.
Wouldn't that be interesting if it marked a high?
Okay. For me, Dale, the first indication, very first indication would be a break below 12,600. So unless we break below 12,600, there's nothing to see here. Do we have a shooting star today for the time being? Yes, we do. Did we actually, with a very minimum momentum, manage to break above this 12,800 zone that had been constraining price action since the beginning of May? Yes, we did. Is it obvious that this move higher, that in essence started, as you see, on February 2016, has had only, minimum and mostly flat correction? Is it at least, for the time being overblown? Yes, it is. So if DAX reverses here, will I be surprised? No. No, I'm not going to be surprised in any way. But would I be shorting up here in the hope that it's going to move lower? No. What I would like to see is a break below 12,600 and some trigger, because, I need both of them actually. And if I see that, I'm more than willing. If you remember, I was short DAX when we had this beautiful ascending wedge here. And then, the good thing is that the market actually showed us that, this thing is not going to work, because, as you very well said many times, after you see, some very tight consolidation, etc., you usually get a bullish break. So, if it stalls where you expect it to stall, but, you don't see a reversal soon.
Yeah, you got to throw over.
Yeah, exactly. And then the likelihood is, and yes, that's exactly what we got actually, a throw over. Besides that, the wedge was beautiful, and that's why I still pay attention to it, because for me, seeing the wedge bottom break, the support, is going to be something of some value. I'm also monitoring this trend line here. So, that's why I'm telling you 12,600. If I see a break below there, then we can talk about it. Now, FTSE had given us a beautiful head and shoulders formation, and then it did this. Boom. So, okay, it can still manifest, sure. But if this is to prove that that's the case, it needs to move lower from this point on immediately. Right. Otherwise, then it invalidates the possibility if we start seeing a prolonged, a completely asymmetrical right shoulder, etc. I don't like it anymore. So fine, if we move lower straight from here, yes, sure, it can still be called.
And that's gonna end up being the head of a head and shoulders top with a new neckline down.
You're absolutely right. What you're describing, for friends that might not have noticed immediately what you said, is that perhaps we end up having shoulder, head, another shoulder here, and then having this as a neckline, correct?
Yeah, well, I think the break will go to the neckline, and then
okay, and then and then saying, okay, this is a broad, nice, long head and shoulders formation. Yes, it's actually
the wedge rule would take it all the way back down to where you anchored your wedge.
Yes,
I know people think it's insane, but that would be what?
We've seen way more insane things, and especially with the current event risk that lies behind the the UK, and due to Brexit, etc. Anything is possible. Anything is possible. possible, really. And
Yeah.
you know, I don't want to play smart here, and I will tell you the fact. I told you yesterday that I had started nibbling in the pound kiwi, and I'm currently underwater and very likely to be stopped out. Regardless, this is because I also believe that we're going to see more kiwi weakness. Because in yesterday's analysis in the cable, which yesterday it happened that I did it because we're sharing with Blake, you know, and we're exchanging. Let me tell you exactly what I wrote. The cable closed the day near the lows, getting rejected for the fourth consecutive day from the 128 zone. As long as we trade below it, expect 126 to be tested. I mean, I really believed seeing a fourth rejection that we're going to test 126. I mean,
Yeah.
Look at this. How many times does a market have to reject you from the same level to understand that the sellers up here are way
You called it out, bad candle in cable yesterday.
Yes, I mean, it was the fourth one. It was the fourth one.
Yeah.
You know, how many times will somebody try to buy it against trying to penetrate that zone until they say, okay, you know, I'm not playing this game anymore. Obviously,
You know what someone said to me once, Steve?
What, mate?
Dale, how many times do you have to hit yourself in the head with a ball-peen hammer to know it hurts?
Yeah, so, you know, they gave up here. They gave up here. Of course, you'll tell me, but it was Carney coming out, etc. When a market wants to do something, you know, it will find that its triggers. Sometimes, that's why sometimes we see some ridiculous triggers. Sometimes you see something that appears to be, you know, a very weak trigger producing a move that you wouldn't expect. You know, it's not fitting to the move. But, you know, if the market was already, in a sense, feeling that the move is coming, then, you know, it just needs a trigger. Carney, of course, coming out dovish, in a sense, what he does is that he cancels out. He definitely reduces by a lot the macro effect of the 5-3 vote that we saw in the MPC. So in essence, it says, yeah, you all got enthusiastic because you see a 5-3 vote, but in a sense, as long as I'm, you know, the head here, I'm telling you that this thing is not happening. So for example, he might be communicating that, listen, I know very well that the other four that are voting that we're not going to hike, you know, are not going to be lured into changing their votes as well anytime soon, for example, or whatever.
Yes,
And that was
Steve.
enough for the market.
Hey, Steve.
You're going to tell me about Hockey's member being replaced, Stelio, right?
Yeah, that too. But also we have to remember, okay, Carney's the chief, but he's one vote. And in the past, I think it was Eddie George who was voting against the majority. So, you know, the head can vote against the majority. It's still, you know, they can still hike or cut against the chief's
yes, but I'm pretty sure that Carney knows where everybody stands in the committee.
Yes,
You know what I mean?
You know, I would go with Eddie George because.
Hello?
Dale?
Look it up. Google Eddie George.
Oh, Dale, I think we lost you for a few
back.
seconds.
Yeah, he's a running back in the NFL.
Okay.
National Football League. That's all. I mean, I didn't know he had another career.
But obviously, the head of the Bank of England has effect on the other members, obviously. But, you know, it's not a...
It's not only a matter of effect, Stelio. Is that he speaks to them and he knows where they stand, right?
Of course. Yeah.
I mean,
it's like Socrates and Aristotle right now. I'll be back in 5.
Yeah.
Okay, so anything, Stelio, anything actually to add on the UK event list or whatever? Or
not really. I mean, the thing, the Carney...
In your point of view, after seeing the first day of negotiations, etc., any new info from the...
Well, apart from the photos that people have been taking that the negotiations have started, I don't think anything has actually substantially happened. But obviously, Carney's comments are have been quite important and giving weakness to sterling. But no, nothing has changed so far. So nothing really.
Okay, so having to do with cable, since that was the conversation, ladies and gents, can we find support here because it was the previous low? Of course we can. Do I think we will? No, I don't. I definitely don't. I think that the likelihood of holding this level, in my mind, that doesn't mean anything, of course. It's just an assessment I'm making, is like 20%. So I think that a move to at least test this broken triangle trend line and the 200 DMA that coincides is very, very high, if not to move lower. But at least we should see a move to there. And actually, now that we're talking about it, I think that more relevant would be for us to draw a fib from here and check where we are. Okay, so we actually have triple confluence there. That's why I drew this fib, because we also have the 50% fib. So I would say 125.70, call it roughly, triple confluence. This is anyhow the zone that I had drawn since we were retesting, we were near the last high that we registered. I think it's, it's in the cards. And now what happens from there, we'll see. Personally, I kind of doubt that will hold as well. So, why not 124.55, call it roughly, which is the 61.8. But, for me, cable is heavy. And perhaps it's one actually of the reasons that some of the commodity pairs also, remain decently bid, because they're seeing some strength in their crossing with pound. Now, I think enough said about cable. You more or less got my position on that. Friends in ForexAnalytix also read it straightforward yesterday on our analysis as well. So let's go ahead and see. Okay, interesting. Actually, I think very few people have asked about it. USD, the Swissy. Okay, the Swissy got rejected from this trend line roughly. But we're still being capped by this very important trend line. So I would say the following, that Swissy, short term it is bullish. We might even see an attempt to forge an inverted head and shoulders, like shoulder, head, shoulder. But I would be very careful at the retest of 98.70. We have very strong resistance there. So, there is not much between us and 0.9870, but if we get up there, I would be carefully monitoring price action, because, a rejection from there would really get me interested in perhaps shorting the pair, which obviously means the exact opposite for Euro USD. So for example, if I saw a move down in Euro USD, which more or less I see it very heavy, I see the head and shoulders formation here if we go to the line chart, as we've said. So a move down to retest 1095, 1097 is quite likely. But if I saw there some very strong support acting and, creating a big rejection in the market, a big rebound actually from there, I would still believe in the bullish case. So, I'm short-term bearish, but that doesn't mean that I'm going to be long-term bearish. I mean, I have not set in stone. We said it immediately. I believed in a dollar rebound even actually before we saw the Fed decision, because I thought the market was expecting too much dovishness. But,
You did. I remember that. I remember that tirade.
Oppositely from Nick and Grega, which, their analysis points them even more forward in time, and I've seen it work multiple times, so I really take it into account. I don't have a longer term view for the dollar. So for me, I take it one level at a time for the time being, because I think that the dollar is quite mixed. So Do I expect the next move from the dollar to be bullish? Most likely, yes. Am I convinced that we're going to see a new high or a new bull leg for the dollar, strong bull leg, a prolonged one? No, I'm not yet. I'm not even near being convinced for that. So that's where I stand, in the general dollar thesis. By the way, cable is already breaking below the level we were talking about, so that level is already a goner from what I see. And this is the DXY for whoever hasn't seen it. This is the line chart we've been looking at, the inverted head and shoulders. We've already broken above the neckline. So simply a simple measurement of where would that take us as a next move would be 98.40, and why not? Let's go back to the candles. Why not?
That was the breakdown candle.
Yes. Why not? For example, if the bear trend is still to resume, why not get something like this?
Yeah.
Why not? But, we have some more room to move for sure, at least. Then if we get a break above this, which was previous support that was tested 1, 2, 3, multiple times here, and then after several attempts we broke below it. So if the market actually breaks above it, then I'm going to start considering the possibility that this correction, which I had already marked as a possibility because I was monitoring the Elliott wave count. So here what I was seeing was 1, 2, 3, 4, 5. So why not an A, B, C? So then I might start considering, yeah, the ABC scenario, was, seems now to be a prevalent scenario, for example. But, let's see what we do up there, which more or less I'm convinced we're going to test it. So let's see what we do from there, and, we take it from there. But I think that the bullish case for at least the short term for the dollar looks, quite nice.
I think the coolest part of that chart, Steve, is how we prep the community for a spike low, for a third drive, to clean out the stops. And
this one, exactly, yes, this one, and the retest of this channel.
And
yes.
We talked about that, not only that day, but that having the potential for it to do that, and the euro do that, even though my view was the pound was a preferred short. But, when you could prepare people ahead of time, they have time to think. And then they have more time they don't have to put time into analysis. They just execute because they see it manifest.
You know something, the pound, now that you mention it, is one of those times that I feel bad for even following macro stuff. No, in general, I don't regret it because I think it creates a more spherical view on what you have in the markets. But I have to tell you that it has hurt my P&L several times because if you remember, I gladly resorted the initial retest of 128. I was short a couple of times. I took profits. I resorted, and then we got that MPC vote, and I was like, "Whoa, this is a game changer."
Now you're not there because you have nothing on.
Yeah, exactly. And technically, it played out absolutely perfectly. This resistance zone, it was already there on my chart. When I established my short, I was very convinced that this is a high probability trade. And then we got the MPC vote, and I was like, whoop, that changed the balance, and I'd rather, remove.
I rest my case on partials. And I've also heard that to be there for the good times, Steve, you have to be there all the time.
Yeah, for sure.
Anyway, that's why Blake is never flat.
Oh, for sure. And Blake is, I've told you, Blake has a weird kind of stamina. I mean, he is a non-stop fighter. I mean, I've asked him several times, how can you constantly be fighting your positions and sleep good at night, etc. But he has a unique mentality, very rare. he's gifted, he's gifted. And he can turn around any hardship and hard situation. He can find him. He keeps his calm and his coolness, no matter what happens. He might get a little bit pissed, but that's it. He remains calm and fights the hurricane, straightforward, looking it in the eye. Okay.
So do you have an 8x10 autographed picture of him on your desk?
Of course, of course.
All right, just curious.
No, actually, something.
Actually,
something. I have a bubblehead of Blake that he had sent me for fun from his expos, with MB trading, etc. So it's fun because my son actually loves playing with Blake's bubblehead. He loves it. Yeah, he climbs on me on the in my office, on occasion. And the two things he likes to play with is the lighting system and Blake's bubblehead.
Yeah, it's like, people in the business like to pick Blake's brain. Your son likes to play with Blake's
literally, yeah.
That's great.
Yes, that's true.
All right, so we're about 7 minutes away from Yohei.
Okay, so let's show a couple of things more that our friends have asked. Kiwi yen. Kiwi yen. It still seems kind of incomplete to me. I like today's candlestick because it's right on the 61.8. Yeah. So especially if we close negative on the day, that's going to be a lovely signal of a reversal. But I have the feeling that we're missing one little leg higher yet to come. So, and I also don't like the fact that this is where we found support in Kiwi yen.
Yeah.
So I don't know. I wouldn't be short Kiwi yen. In the short term, it can work out here, definitely. Especially, let's see what we do on the day.
That's a pretty bullish formation, though, man.
Yes, but I'm not a fan of being short either Aussie yen, which I'm showing now here, or Kiwi yen. I haven't traded them for some time because besides this, which was very clean, and I didn't trade it because I had a lot of other positions, but this formation I actually liked it a lot. Besides this, I haven't seen recently something I like very much in those crosses. So I've mostly stayed sidelined. Now Aussie USD. Not much to do here. We've been hitting some resistance. I'm not sure this is complete as well. Kiwi, if it decides to load. Kiwi, we're still remaining below here. That's a positive. On the negative side is that if we go down to a 4-hour chart, it looks mostly like we're forming a triangle. And unless we break down soon, then most probably this is going to yield another leg higher. So, I would definitely keep a stop loss to remaining positions you might have just above the previous spike that we had the day before yesterday. Obviously, for the time being, it remains the fact that being long at current levels is not smart. You don't have the risk reward. That's the only certainty here. But on the other hand, the more we don't break down, the more the likelihood that we will continue sooner or later. Now USD CAD, what is troubling here with USD CAD for the up until yesterday, I was like, okay, it remains very weak, it remains very weak, it remains very weak, it's going to break down. But this is a morning star formation now on the daily. If we close like this, those three candles here, those three candles are a morning star formation, and that's a very powerful candlestick combination. Still, of course, we haven't taken the high here at 133. So while we remain below 133, my bias remains bearish, and the day hasn't closed. But if we close like this, now this candlestick formation complicates things. So from being straightforward bearish, it's going to put a question mark here of what happens from this point on. So, generally, you remember, Blake started the week saying that things have become quite choppy and we need to be patient. And you remember that I said the same thing, that, we need to be nimble, we need to be patient, we need to see how the dollar move is going to unfold. Is it going to be a small correction? Is it going to be a new trend? What are the markets going to do? Are they going to follow through with more risk-on trades? This is one of the periods of the year that you have to be patient. Of course, you need to, to keep doing your due diligence. You need to keep monitoring the market, because unless you monitor, you're going to miss trading opportunities. There's no question about it. But trading opportunities after the Fed seem to be coming, less and less, because the market is currently more or less confused. So, just be a little bit patient. Let's see how the situation is going to evolve, and that's why we're here. There are times that you get one signal after the other, like a machine gun, and times that you're like watching the markets and you're like, oh, come on, give me something good I can trade off. And, the market isn't giving it to you. But, this goes with trading. You have the good periods and, the slow periods. In these cases, a thing that you have to develop not to lose money is to learn to sit comfortably on your hands. Don't force yourself taking trades that, don't satisfy your criteria just because you haven't traded something recently. And if you really want to trade something recently, if you wanted to trade something recently, how many times did we talk about the USD ruble? Adele?
Yep.
This thing
Yesterday too. Yeah.
This thing is a goner. Look at it. Look at it.
Yeah.
Not only that, we might even have head and shoulders developing here. Huh?
Yeah.
Shoulder, head, shoulder. So this thing probably has legs. And even if you look at it from this perspective, so let's make a simple analysis here.
There's a lot of geo stuff going on in Syria between us and Russia right now. They said that American fighters, so I really think that, it looked like,
just look at it.
Russia was going to made its move into the Middle East, and no one was going to challenge them during Obama, and it looks a little different under Trump. So, this could be a challenging period for Russia and for the world.
Definitely oil getting decimated doesn't help, right?
Yeah, good point.
Definitely. But people have to remember something. Last time I checked, which I have to be very honest, it wasn't very recently. It was when we were having those $3 million positions that I was talking to you about yesterday.
Yeah.
Russia had a debt to GDP of 18%. That's like zero for today's environment.
Yeah, because the U.S. is 180 or something.
It depends if you count total debt or public. Yeah, but whatever. Yes, it depends on what metric you're looking at. It's above 100 for sure.
So fiscally, their house is in order.
Absolutely.
What you're saying.
They have a lot of leeway, and if they actually wanted, they also have incredible amounts they're spending in things that they could cut down within months. You know what I mean?
Mm-hmm.
They're definitely overspending in several aspects of the state, etc. So, everybody's saying, yeah, put in that, put in this, and, a tough spot for this, and geopolitical, blah, 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 blah. But I know something is that Russia remains a country that is extremely rich in resources, extremely, insanely rich in resources, with a negligible debt. For how many countries can you say that?
None.
And something else.
China.
It has a very strong political leader. I know that the vast majority of people here, if we have this discussion, and by this I'm not trying to imply that I'm of an opposite opinion. Putin is more or less part a dictator. I'll explain why I say part. Because he does control aspects around the state in a way only a dictator would do. But on the other hand, you can ask Velo about it, which, by the way, is sitting exactly next to me. Russians adore this guy. I mean, the average, what you would call in America the average Joe. That's the expression, right, Dale?
Yeah.
They love him. They love him because you know, education is not high, so they really believe that, oh, Putin, you know, is a guy that has put Russia back in the map and has given us our pride back, and he's a pure nationalist, and he believes, you know, he's a true Russian, and he believes in making the country great again, etc., etc., etc. So,
well, I'll tell you something. People love Yohei Elam too, for all his hard work he's done on Forex Crunch over the years. And because of that...
because of that, you need to start an interview with him.
You're right. I'm going to make him the...
And I'm going to be here and enjoy it. Give me another 10 seconds. I said it yesterday at some point. I intervened when Blake was speaking. I'll reiterate it now. I know that now you're reading that oil is getting decimated and everything else, and it has a good reason for going lower, but in my opinion, don't be short against this 42.50 zone. The risk reward is not to be short here. Actually, if you're looking to trade it counter trend, the opportunity is near. Okay.
Thank you, Steve.
Okay.
Great wrap up of everything.
Okay.
Good coverage.
It was my pleasure, Dale. And
okay,
the rest of the questions, that's why we're here. We'll go over them tomorrow, guys and girls. Thank you for the time, Dale. Have a wonderful interview.
Thank you for your coverage of the market, Steve. Every day I learn something from you. Okay, Yohei, you're the presenter. I look forward to hearing your voice and seeing your screen. My trading warrior brother, who I used to work live events with and have interviewed several times at FX Street. There he is. Hi, buddy.
Hi, Dale. How are you doing?
Oh, so great to hear your voice. Oh, bonus. I even get to see you. Yohei, I have to tell you right up front, I miss working with you. We had so much fun.
Yeah, it's been a while.
You liked my yelling imitation. Okay,
oh, yeah.
You know, not everyone appreciates it. So yeah. I've been telling the community that you are one of the best I know for understanding the fundamentals of each market. Okay, I remember when you were my go-to guy. You know, Blake is a big fundamentalist. He doesn't make decisions just by looking at charts, and I know you're that way too. What's your title at Forex Crunch? Editor?
Founder, editor.
Everything.
Yeah.
All right, King.
Yeah, it's mostly me. Yeah, the site is mostly me.
So, King of Forex Crunch, I recommend everyone follow Yohei and go to his site for some great fundamental analysis. Almost all of it's free. And so why don't we get going, buddy? You know, the news today, we could start with cable. Okay, you're a mind reader. So the fundamental events seem to be weighing on it. You know, they were even floating things like last week, I think Blake told me that there was some talk of canceling Brexit. You don't think that's a possibility, do you?
I think it's wishful thinking on the part of some people because, well, Brexit, there's no such thing as a good Brexit, I mean, for the pound, for the UK economy. So, and many people are what's called remoaners. They moan the result. I'm also sorry, I mean, living here in Spain, I have many British friends who are also regretful, but the UK is quite a strong democracy and both parties respect the result. I don't see them going back on that. So I think it's more wishful thinking than reality. And that's why we're seeing the pound still pound dollar and also euro pound. The pound still, well,
yeah.
1 year. It's the 1 year anniversary this week, and we're still much lower than we were beforehand.
The 1 year anniversary of Brexit.
Yeah.
Oh, and yeah.
Interesting.
Okay. Okay. So Yeah, euro pound continues to benefit from pound weakness and euro strength. So what do you think would be fundamental events that could take the pound back to new lows or maybe down to, 22-ish, 23? Is there anything on your radar screen before we move away from the pound that we should be have on our radar screen and paying attention to fundamentally there?
I think politics recently has been a lot of noise, internal politics, and the elections. Well, it did push the pound higher. Well, when the elections were announced, push it lower. But I think it's a bit back to the basics, back to the indicators. We saw how, for instance, all the indicators look weak. I mean, standards of living are falling, wages are slowing there, retail sales are falling, growth, which was quite good after Brexit initially, is now slowing. So last week we had this vote of the MPC that was, despite all this weakness, 3 members voted for a hike, but that was, for me, it was an attempt to orchestrate the pound a bit higher to keep inflation more in check. But the fundamental, I don't see them raising rates. I think that what Carney said today is more significant, and to push the pound lower, well, I think just as time passes by, we'll get more negative indicators from the real economy, and yeah, I see more downside.
You talk about weakness in the economy. Is it beginning to have any impact? I know the real estate market globally has been on fire, and especially in London. So has the Brexit hurt real estate prices in the last year or so?
Yeah, we've seen this week, I think yesterday, the Rightmove HPI, house price index in the UK, show a drop, especially in London. So less money is flowing over there. We have lots, as you mentioned, money of rich Chinese, Greeks, well, everybody, French, has been flowing into London. And I think with Brexit, there's sort of this reality check with Brexit, and prices are just too high over there. So that's another negative for the pound, that house prices are at least stalling, at least reached some kind of halt at the moment.
What country in Europe is going to benefit the most from Brexit, as this exodus from the London financial district, which I don't think will completely go away, but maybe dented a little bit? Where are people going?
I think there's no, I mean, in terms of financial centers, there's no full replacement. And there's the first tier is Paris, Frankfurt, then there's Dublin. People also mentioned Madrid. I live here in Barcelona. I think, as you said, financial services will still remain important in London. It's just too big. But in terms of new companies, startups, where multinational companies hire new people, it'll be outside. At least here in Barcelona, I'm aware of a growing startup scene, also in Madrid. So some people call Barcelona the Silicon Valley of Europe, which I found exaggerated, but at least it's good news for where I live.
You better lock in a lease on your place. Rents will go up, buddy.
Yeah, rents have gone up in Barcelona 20% in the past year. So
it has already, huh? Okay, sorry, I didn't have you on a year ago. So anyway, hey, why don't we move over to Euro? And, the Euro's been resilient. We've had this 1,000 pip move off the low. And what's driving Euro prices and making them stiff is what? The market's expectation that we're moving closer to the end of QE. What fundamentals are driving this? And do you think that even if we say had a pullback in Euro to 110, 109, maybe even 108, that would just be a correction in the bull market? Or do you think, and I'm starting to think that parity people may have to wait a long time to see that?
Yeah, maybe a few years. I think there was a chance for parity at the beginning of the year when the Trump trade was full on, and Europe was still struggling in terms of growth, but Trump didn't deliver. I mean, I thought the dissolution from Trump would take at least 100 days or so. At the end of April, it would coincide with the French elections, but it happened a bit earlier. So we had this bounce off the lows. Currently, well, I think the trend remains to the upside, the long-term trend. Politics look better in Europe with Macron and Merkel, and then in the US. Economic growth here is stronger, 2.3% in Q1 against 1.2 in the US. And monetary policy until 2 weeks ago, I would say it also had an advantage, but Draghi went dovish, the Fed went hawkish. So I think what we're seeing on the charts is exactly what we're seeing also in fundamentals, that a pause, yeah. So maybe medium term we'll see. And this resistance line of 113, which was the election high in the US, the US election high, that proved to be a very nice barrier. Technicals don't always work that well. There's so many moving parts in euro dollar. This was the case where they worked pretty well.
Okay, so we have this pause here, pause to refresh, possibly with you're over there, you're in Europe, with the reaction of the U.S. pulling out the Paris Climate Act or whatever it is it actually a cohesive event for Europeans, and are they going to start drawing closer to Russia and China? I mean, even the UK went to that new bank that China started that's supposedly going to compete with the World Bank. So was that a seminal event from Europeans' perspective?
It was quite a disappointing event here in Europe because the US and China were working together on this climate, the two biggest polluters, the two biggest economies in the world, and this U-turn was quite disappointing for Europe. But I think regarding getting closer to China, it began already earlier. I mean, the German miracle, the export growth in Germany relied on China more than its Eurozone peers. The UK with Brexit, they talked about forging new trade deals with the US and with China. So looking towards China with the Chinese Belt and Road Initiative, which is very ambitious and expected to reach Europe, I think it isn't new, but with the US sort of taking a step back from the world, that of course...
China's going to step in and fill the vacuum.
Not all of it. The United States is still number one, but it's a step back, and it allows China to take one step forward. So
okay.
That's a development. Yeah.
Okay, so your view is that this is just a pause in the euro, and there's still a chance for the dollar decline to continue against the euro after a pullback. I know some people were talking 120-ish was pretty doable this year, maybe better. Are you in that camp?
Yeah, I think 120 is possible in the second half. I mean, towards the end of the year. I don't think it's going to be a big leap. Unfortunately, volatility is quite low, but I see the trend is continuing to the upside. Growth prospects are positive here. Political prospects are better. And eventually, at least after the German elections in September, with more uncertainty removed, then Draghi can begin talking about tapering, and then we could see maybe an acceleration more in the fourth quarter than in the third one.
Okay, if we, I'm a little, would be interested in your view on the yen, because we had a pretty tremendous bond bear market rally, whatever you want to call it, and you know, it's really the key risk on, risk off instrument. You know, you could correlate it with gold pretty well. You know, US dollar yen goes down, gold goes up, vice versa. Same with 10-year yields, pretty close correlation. What's your view on this? I think the market's pretty split. There still are a lot of long-term yen bulls, you know, talking, you know, 118. I've even seen some super bulls, like I had Jamie Satley on one day, and he talked about 150. What's your view on the yen? Do you just have to stay neutral with this pair? Or what fundamental events are going to drive it? I know the news out of there, they're celebrating that they're no longer in a deflationary period. Do you agree with that, or is that probably?
Celebrations are.
Huh?
I think celebrations are a bit premature, but they're similar to Draghi. They're sort of not ready to let go of the monetary loosing pedal, if you wish. I mean, they're not turning to the hawkish side like the Fed's surprised last week. So they're continuing to print yen to buy bonds. But for me, dollar yen is usually the best reflection of U.S. dollar strength or weakness. So we had and of course, as you said, well correlated to U.S. yields. Everything goes together. The Fed is hawkish. The U.S. dollar rises, and it's best reflected in dollar yen. I mean, when people talk about the dollar, in many cases talk about dollar index, but that leans a bit too heavy, in my opinion.
On the euro.
Euro, yeah. So dollar yen is.
So that's a pearl. That's a pearl face that your best indication of dollar strength or weakness is U.S. dollar yen. So, you know, that I'm going to start paying more attention to it instead of trying to get all my cues from Dixie. So you have a view on directionality on this yen at all?
Well, of course, went a bit up from the top side. I still see it a bit lower in range because I'm not so optimistic about the US dollar. Of course, it went up. We're sort of in the middle of the wide range between 108.10 to 114.30, the cycle low and the cycle high, bang in the middle, actually. So I think there's more room to the downside, but based on fundamentals. But if you look at technicals, you see a higher low, of course. So
that it sounds like you're like me. You're strongly neutral with a bearish bias.
Yeah.
I can't just be.
Yeah.
We can't just be neutral, Yohei. We have to be strongly neutral. So
strongly, decidedly mixed.
Yeah. So why don't we move on to commodity currencies? Canada, Aussie. You know, we have some pretty good oil weakness. Canada looked to me like, you know, we had a false breakout over 135.5, 38. We've had a pretty good break. Crude has been going down for a while, and you don't get much of a lift. Say like that June period, crude was getting smashed, and you really didn't get much of a lift in Canada. Couldn't even retrace half the move. What's your view on USD CAD?
Well, the biggest mover recently of the Canadian dollar, Canadian dollar to the upside, dollar CAD to the downside, was the hawkish shift by the Bank of Canada, first Wilkins, then the governor. So, and I think in this case, contrary to what we had with in the UK last week, it's real. The Canadian economy is looking quite good, despite the fall in the price of oil. Despite worries about home prices in Toronto, the wider economy is doing well. There's very strong job growth almost every month there, and growth is also, in general, looking good. So this hawkish bias is justified. I think that 137.90 peak earlier this year was the peak for the year. Of course, oil prices are close to the lows, but what we've seen in oil prices in the past 2 years is sort of this pendulum swing. Once they fall too much, the U.S. shale industry produces a bit less, and then prices go up, they produce a bit more. So there is a lot of noise, but I don't see another collapse of oil prices to where we were at early last year.
How about 38 to 35?
Yeah, I think
that's like monthly pivot points support, something like that.
Yeah, currently 43.20. So well, as I speak, of course, it's going in the other direction. But 42 was a low seen late last year, and then we have.
It's like you look at the last 2 weeks from 52 to 43. You know, basically, you know, $8, and then you go back to Canada, and a good part of that decline. Canada was only able to move sideways. It couldn't rally. That to me was a bit of a market tell, that little flag area we had in Canada before last week's puke job. So I think a lot of people might get tricked in Canada that are bearish oil and looking for a Canadian rally, USD CAD rally. So Your view on, say, Aussie Kiwi here, and you know, if you have a Kiwi position, I'll either drink more or drink less milk.
I actually tried drinking soy milk and things like that because they say it's healthier. So
Yeah.
I'm not contributing to the New Zealand economy, but sorry. But
Right. I won't need antacids either. So, okay. So, so for lactate intolerant people, what's your take here on Kiwi? We have, I know Blake has a lot of interest. There's central bank is meeting this week. What are your expectations?
they usually like to talk down the Kiwi Governor Wheeler and his colleagues there at Wellington. So I think they'll give a small nudge to the downside. Of course, there's been quite a rise to the upside. So, and they don't like it. But again, fundamentals are positive for the economy over there. Price of milk, we're supposed to have an auction right now. Well, still no data out there, but the past 5 or 6 auctions have been positive for the price of milk. The economy is doing well. There were cyclical growth in Asia and also in Europe. Also, well, it's a relatively positive time for global growth and a risk on, so I think it'll be hard for them to match. I mean, if they hit the Kiwi, that will be perhaps a buying opportunity. Levels I'm looking at 73.20. Recent high, of course, is level to watch, and the recent low is 71.70.
So then what would be your view on Aussie Kiwi? Do you think the Kiwi's going to continue? As of late, you know, the Aussie Kiwi had a nice move to the upside. We tested major support last week. Are you looking for Kiwi to outperform Aussie or the other way around?
The Kiwi outperformed the Aussie. Maybe now we'll have some catching up. This parity is always elusive. And I'm sure New Zealanders are looking for that parity with their rivals in Australia, and I'm not sure that's coming because usually these economies just grow and expand and contract, or not contract, and slow down and accelerate together. So I would.
So it's just a matter of magnitude, how much they slow down or how much they expand.
Yeah,
but they rarely diverge from each other.
No, because both commodity currencies, neighbors. Of course, there's a difference between milk and copper, different markets, but they do tend to go together. Yeah.
Well, Yohei, you want to show your website so people could take a look at it and know what it looks like and give your Yohei's Twitter handle, he's a must follow, is @ForexCrunch, and he does great articles. In fact, I'm a betting man. I bet that this interview will be on your website in the next couple of days. Yeah. So there's ForexCrunch right there. His screen's popping, but great articles, very good support for traders, good technical looks. You have a lot of contributing editors on this site, Yohei, or is it mainly your writings?
Well, I would say 60% me, and the rest is contributions on more technical analysis because I lean more to fundamentals and some educational content. So thank you very much for the kind words. It's also been such a pleasure speaking with you after a long time. I've seen your amazing website with your colleagues there at
what a team, Yohei. You know, some guys on Twitter have called it the dream team.
Yeah, makes sense. I don't know all the guys there, but I know Blake, I know Grega, who's Elliott Wave Forecasts, and the other names also ring a bell. And the site looks amazing, and I'm sure you're giving a great service. I know your dedication, of course, to traders in various places you've been throughout your career. So
it's hard to keep up, huh, buddy?
Yeah. Enthusiasm hasn't changed since we last spoke.
Well, thank you so much, my friend and trading warrior brother, Yohei Elam, and let's get back together a little bit down the road. Have a great year, my friend. I'm always hoping the best for you and yours.
True.
Okay.
Okay, thank you very much.
You're welcome. Everyone, that was Yohei Elam. Should be your source for fundamental information. As you could tell, the guy knows his stuff. And, oh, the blinking, yeah. Okay. The blink, giving him a seizure. So before that happens, Ron, I'm going to wish everyone a great day. And I'll see everyone tomorrow. Good hunting. And remember, don't just count your pips, count your blessings. And thank you for your psychedelic presentation, Yohei.